Welcome to the TechArena Great Debate. My name is Allyson Klein, and I am here with three of our TechArena advisors, Lakecia, Gunter, Jeni Barovian, and Laura St. John. Welcome to the program, everyone.
Thanks so much, Allyson.
So this is the first time we're doing a great debate together, so let's just take a little bit of time for intros. Lakecia, do you want to kick us off?
Yeah, awesome. It's so great to be here. And I tell you, I just enjoy having a conversation with you ladies at any point in time. So today I was so excited to jump on. But Lakecia Gunter, been in tech for about 30 years and worked across multiple industries, spent some time at DoD, but the last 18 years in the Pacific Northwest, 12 and a half years with Intel in various roles. So love Intel. And 4.5 years with Microsoft in various roles. Last role was Chief Technology Officer for the partner organization. So really excited to spend some time with you ladies today.
Awesome. Jeni, want to go next?
Absolutely. I agree. It's great to be here and have this discussion with everyone here today. Really excited to be joining as a co-founding advisor for TechArena, which builds on the experience I've had over 26 years in the semiconductor industry at companies like Altera and Intel, leading product portfolios and P&Ls, servicing a number of different industries, including networking, communications, data center, various embedded and edge computing markets. So it's an exciting time, that's for sure.
Fantastic. And Laura, go ahead.
Well, thanks, Allyson. I echo the sentiments so far. Great to be here today. Also, former Intel, also was at Ampere, kind of in finance, business development, operations. And not only did I join TechArena, but I'm also co-founding an AI startup. So so much for retirement. But it's exciting. And what a neat time to be in business and be able to kind of talk with you guys about what's going on.
I am so excited for today's topic and to dig in. The topic is the pace of innovation has changed, the playbook hasn't. And we're going to kick off with just a simple question, which is just taking a look at each of your backgrounds. All of you have navigated major inflection points in the tech sector, from cloud computing and 5G to IoT and mobile. Today, we sit at a major inflection point, maybe argued to be the biggest inflection point we've seen in the industry with AI. What is genuinely different about this particular moment? And how does that impact how leaders are navigating right now? And where do we see this being completely different? And how do we see it as being maybe a familiar pattern wearing new clothes? Who wants to kick it off?
I'm happy to jump in. Allyson? Yeah, I'll go for it. Yeah, no, it's a great question. I mean, I think, there are parts of this moment that are very, very familiar. And I think we can all agree to that. I mean, we've seen this movie before with all of us having been in tech for a number of years, where you have the hype that outruns the readiness. Capital moves many times are ahead of proven ROI. And every company right now is feeling the pressure to show that it's in the game or that it's winning. And I think the difference for me, at least from what I see, is the compression. Many of us worked at Intel and worked in the cloud business, and companies had more time, I think, when we were moving to cloud. You could have experimentation and then adoption and scale. And AI, let me tell you, we don't have the breathing room anymore. It's not giving leaders that same breathing room that we had in other inflection points. And so I think the system is seeing stress. Customers are asking for solutions that are still forming. Partners are building offerings while, the use cases are constantly shifting. And as a seller, we're having to position value before the model is even fully proven. So I think it's not a failure of one function. It's a complete system under stress with AI. Mm-hmm. And so I think the old playbook, we were familiar with writing a lot of playbooks in our career, assumed a really linear sequence where you can build something, you can enable it, you can sell it, you can scale it. Well, AI is collapsing that sequence to the ground, okay? We've got to build a new cadence right now. And so I think, what is different about this time is that for AI, it's not just the speed of technology. And so that's what I'm seeing, familiar, but yet some differences. And I think those leaders who can adapt to that, are really going to help their companies navigate this phenomenal AI inflection point.
Yeah, I agree, Lakecia. I've been thinking a lot about inflection points. I started my career during the .com era and then spent a ton of time in telecom and networking and moving through the various generations of wireless technology. So I got a lot to reflect on when I think about the AI boom now and its comparison to prior transformations in the industry. There are a lot of comparisons being made between the AI boom and the dot-com boom. And I think there are some places where that's valid, but I think there are a lot of other areas where that's very imprecise. After the dot-com bust, as much as 90% of all fiber laid during that build out sat unused all the way until the early 2010s when video streaming exploded and that capacity finally got put to work. And so you had this this experience of stranded infrastructure. You look at a tremendous amount of CapEx outlay that's happening now during the AI boom, but what's different this time around is that demand is consuming capacity at an even faster pace than it can be built. So you've got data centers that are down to almost no vacancy, down to less than 1% vacancy, and you've got hyperscalers and other data center operators spending hundreds of billions of dollars on an annual basis to continue to build that out at a massive pace. And then you also have this kind of opposing force of decreasing cost per token. And so the demand is increasing tremendously. And you also have this sort of Jevons paradox type of situation that we saw during the internet build out and the original data center boom. And this advent of cheaper AI and more compute being available. So you have this ability to drive more use cases, but then that in turn drives more infrastructure. So the interesting thing that's going on is that, as Lakecia said, the business models are continually being innovated, but what hasn't happened yet is that revenue hasn't caught up yet in terms of how to monetize this across the entire value chain. There's still a lot of experimentation going on in terms of the business models and the pricing tiers and how to price features. What's a base feature? What's a premium feature? How do you package it? How do you monetize it to create really durable revenue streams? So you've got hundreds of billions of dollars being spent on infrastructure, and you need to translate that into reliable revenue streams. But, like Lakecia said, the playbook is still being written. So, there are some familiarities, right? The fact that there's this massive outflow of CapEx and, maybe some ROI aspects that aren't clear. But what's different now in the AI boom is really that utilization dynamic and also that monetization gap. And both of those need to close. Both of those need to be solved.
I think maybe one thing to kind of add in there, right, is, hey, do more with less is a very old story, right? And now all of a sudden there's this boom of productivity that we see with Chat GPT and other things, right? But I would say the pressure that we see or hear about in the marketplace is kind of getting rid of actual workers to replace them with AI on something that is unfamiliar, hard to be tested. That where's the human in the loop to really make sure that your structure is what it needs to be. I think the other piece that was kind of what hindered cloud advancement was until there was kind of almost stability kind of across the environment, right? You've got tremendous vendor lock-in and it's almost like an afterthought, like nobody cares, right? I don't know if the rest of you have seen kind of your token bills go up and down and how many did you use and whatnot. And I think Jeni's spot on with where's the revenue that's really attributed and directly linked to that spend. We've seen a client who doubled their token usage and their revenue didn't move a nickel. Right. So how are you going to spend wisely, given all this intense pressure and the pressure to move so fast?
Nice. Now, Jeni, you talked about hundreds of billions of dollars of infrastructure being built out to actually fuel all of this innovation. And, one thing that I think about is that we've seen this incredible roadmap of innovation for decades. And in fact, you spent quarter of a century at Intel watching hardware roadmaps from the company set the pace for the entire industry in terms of the trajectory of compute capability. AI workloads definitely broke that cadence. When did you first feel the old rhythm stop working, and what did this look like in practice?
Yeah, for me personally, it came during a career transition. I went from leading the network infrastructure and edge computing product portfolio into leading the product portfolio for data center AI accelerators and GPUs. And I knew enough about what was going on over there that before I walked in the door, that I was kind of entering this whole new universe and really this completely different unit of scale for how compute was being built out. in networking, in edge, and even in more traditional data center computing, the fundamental unit of scale was really still a single system. Selling a CPU was a completely valid business model as semiconductor vendors. We gave OEMs and system designers the building blocks, and they had the flexibility to construct what they needed at the node level. We as vendors certainly drove a lot of innovation, but the roadmap was really predictable and the design cycles were really well understood, and they operated on this consistent beat rate and this consistent rhythm. AI really has broken that model. The unit of compute is no longer a single node. It's really a supercomputer, right? That means that the R&D cycle moves from being more sequential, building ingredients into systems, into really parallelizing itself. Lakecia talked about just the AI economy overall kind of collapsing onto itself. It's certainly happening in the system design space as well. Semiconductor vendors are not designing a chip and then handing it off. They're co-designing from the silicon level all the way up through the system, not just at the compute node level, but at the cluster level, at the pod level, at the data center level, at the AI factory level, all simultaneously. And all of it needs to move at a pace where new generations of silicon and ultimately systems are coming to market on at least an annual cadence. And it's not just the compute that's being co-designed, it's everything. It's the memory and the storage and the networking, certainly the models themselves, every single layer of software, all of it has to evolve together at that breakneck pace. That old rhythm assumed that you could really sequence a lot of that on an expected timeline, and AI really demands that all of that is done all at once.
Now, Lakecia, I know that you've navigated a number of different technology transitions in your tenure across the industry. When you look at the major platform shifts that are going on right now, one of the things that I think about in terms of what Jeni just said is that everything needs to kind of align together. But what happens if you're delivering a technology that maybe is mistimed for the rest of the ecosystem or customers to fully take advantage of? How do you navigate a pivot and go-to-market strategy when you're in mid-motion? And how does that work with inside a company?
Yeah, I think Jeni hit it spot on. Infrastructure cadence changes, so that commercial cadence has to change too. And that's kind of what you're talking about, Allyson, right? I mean, I think the first thing that happens is that customer conversation is always changing well before the company can, and many times, fully be ready for it in that case, right? Because customers, are not waiting for that planning cycle that we all desperately need when we're building out new technologies and trying to take it to market. And so they start asking questions that we may not be ready to answer, like, how do I use AI to change my business? How do I protect my data? Jeni knows that firsthand. And then, of course, always the question is, how do we measure value and how do we govern this? That's something you and I have been talking about for quite some time, right? As we look at the AI landscape, it's great with these use cases and the solutions and the products, but that governance piece is super critical. And so once all these questions start to show up, the whole go-to-market system has to respond and be ready to enable every part of that ecosystem, from sellers, because you're the front line and you're having to craft a narrative very, very quickly. And partners, they need different enablement, or the products, as Jeni talked about in many cases. Unfortunately, it still may be maturing at times, and that's going to be a challenge. And so then you also have the other aspects of the business, legal, security, and governance, all trying to catch up. And so the pressure shows up, as Jeni talked about, at the edge of the company as well. We're talking about device, edge, and cloud, but the edge of the company is really under a lot of pressure, because you've got your customers, you've got your sellers, and you've got your partners. All those folks are meeting and they're saying, okay, how are we going to move forward? What is the right motion? And so the companies who are going to be successful will have to navigate this extremely well, and they have to navigate it well with clarity and creating clarity quickly, not over-promising and under-delivering, because that's the fastest recipe for failure, right? We have to be clear on saying what is ready, what's still emerging, and what can we sell with confidence, and what should be piloted for now, and just being, I would say, transparent and truthful about where we are in the process and the cycle of delivering the product to the market, and being transparent with your partners and your customers and bringing them along. And so one of the things that I like to say is you got to have that readiness contract. You have to be able to articulate, here's what we really have ready. It's not a legal contract, but it's saying as a company, here's how we're operating. Here's what we're going to deliver. Here's a promise that you can count on from us. And so, with markets moving as fast as they are, especially with AI, the credibility is the key. And so you have to be able to separate truly what is exciting, because we all are excited about AI, to what is possible, and then what is ready to go to market at scale. And I think slowing down to speed up is critical in this time frame, and really articulating with your whole ecosystem, sellers, partners, and customers, where we are, what the plans are, and how we're going to get the product to market and help them be successful. So that transparency is going to be key, I think, in this stage.
Now, Laura, when we look at the headlines today, a lot of the focus is on foundational silicon and how silicon is going to advance the entire capability that we're talking about. You, in your past, have structured some of Intel's most complex transactions with companies like Apollo, Brookfield, and UMC. Those deals brought entirely new types of capital partners to the semiconductor table while looking at advancing semiconductor capability to fuel the world's leading applications. Walk us through what that shift looked like and how it signals about the economics that are building tech infrastructure today and how the market has changed.
Well, I think the biggest thing that changed, certainly in my career at Intel, was when I started, right? And I think the vast majority of us started, fabs were like $1 billion to $3 billion. A huge investment, right? But manageable if you thought about kind of the life cycle of the design and kind of how long you could run that equipment, et cetera. However, in that 20 years, we have technology changes, you've had scale changes, whatever, and those fabs are now $30 billion plus, right? So the economics are the thing that just literally it's just crazy numbers, right? So Intel's kind of old mantra was invest in the downturn. I grew up into the Andy Bryant era, and that was the mantra every time. And then you had a ton of new leadership, you had uncertain demand, we had maybe some process technology challenges, et cetera, right? Which really made justifying that level of expensive investment in a downturn really hard, right? So I think, when we got new leadership and kind of wanted to look back at kind of how do we really think about this, right? Justifying that catch-up project amount was kind of staggering, right? And then you add to that, right, post-COVID, right, we had all these supply chain, shocks from globally. You have concerns about Taiwan, and there was, a strong renewed interest in having, sovereign capacity, on U.S. soil and not kind of global. So that put a lot of pressure into the system on a really large bill, right? You saw governments come to the table with the CHIPS Act. There's always been investment tax credits; those have gotten pushed back up. And then you see today a lot of customers co-investing with kind of their key suppliers, right? In addition to all of that, but there was still a huge gap, right? So where are we going to raise this capital? Well, it turned out to be private equity, sovereign wealth funds, infrastructure investors, like people who were very unfamiliar kind of with how semiconductor economics works. So, those were lengthy deals where you actually had to educate people on how you actually even think about wafer demand. It takes 3 to 5 to 7 years to actually build a fab, then you have to ramp it, then you have to sell products on it for a period of time. You had to invest in your process at the same time. So there was so much to kind of educate and get people comfortable with, right? With this kind of historical performance indication of the future, right? Which there's a lot of pressure on that too. So, I think, not only in fab, in wafers and fabs and that kind of thing, you're also seeing data centers being built everywhere now. I think, to fuel the AI demand, right? Which are also coming with, really large, sticker shocks on how much those cost, right? So, I think you're going to continue to see kind of, sovereign investment. I think you're going to continue to see unique partners. But I would say if the fabs are running correctly and you're really kind of, it's a huge investment up front, and then it's almost like a giant cash machine on the back, right? Because you're kind of depreciating that investment over a horizon. You're able to run hundreds of thousands of wafers through. I think Intel's decision to buy out Apollo is really telling, right? So things are going to kind of swing back up. You're going to see maybe some of those things get bought out early. But I think, I think again, back to Jeni's point, right? How are we really monetizing kind of this boom of AI across the entire the entire ecosystem, and that goes all the way from silicon, like up through the person who built you the server, and the supply chain person who actually got it to your door, right? I think that's really going to be telling kind of where that goes, right?
Now, talking about value chain, Jeni, I want to go back to something that you talked about in terms of predictable cycles of compute delivery. We don't really have those anymore. Compute demand now outruns the industry's ability to respond. And we can see that in shortages and stock prices climbing for component vendors as component prices continue to go through the roof. Where are you most seeing that acute pressure point on the physical stack right now? And which ones are people not paying enough attention to?
Yeah. Yeah, one of the biggest pressure points I see is with that massive pace of change, how much lag is there in the overall AI data center ecosystem's ability to respond to how quickly things are changing, right? How is that use case landscape shifting? And how does that drive changes in the way that the infrastructure needs to be built? So one of the biggest ones that's making headlines right now is when you look at, GPU deployment models and the typical ratios between GPUs and CPUs. Up until recently, a very common ratio was 8 GPUs to 1 CPU, because the GPU was doing the dominant share of the heavy lifting for the compute, certainly in training and definitely a large portion of inference workloads. And with agentic AI, that ratio is collapsing. You're seeing those ratios decrease to 4 to 1, 2 to 1, even 1 to 1 in many different deployments, specifically because agentic workloads require enormous amounts of coordination, and that coordination runs best on a CPU. So now suddenly the CPU is becoming a supply bottleneck again, when what we were experiencing for such a long period of time that was really limiting the build outs was GPU availability, and a lot of the technology surrounding the GPU, like HBM availability, other memory availability. And so now this massive surge in demand is shifting, and it's hitting vendors like AMD and Intel and ARM-based CPU vendors. Of course, NVIDIA, has their own CPU as well. So really across the board, you have that shift in that bottleneck. But, in addition to that supply chain question, you have to look at kind of the fundamental re-architecting of the systems themselves that need to occur as this workload shift occurs, right? So it's not just that ratio that I talked about. It's the changes in the network topologies, the changes in the memory and storage requirements, and of course, power delivery, thermal management, all of these things, those demands transform dramatically as compute demands go up overall. Mm-hmm. And, you talk about that pace of change, right? Agentic AI almost has a sort of a recursive quality. Agentic AI begets more agentic AI. So more creators are coming online, more use cases are being innovated, and the infrastructure needs are changing faster than ever before. And so really it's at a point now where we shouldn't think of unpredictability as a temporary state. We really need to just kind of assume that level of unpredictability is just kind of the pace and an attribute of the way that the world is going to be operated. And, the time that I spent at Altera really gave me a specific lens that I think is underappreciated to a certain degree. FPGAs, like the name of the game in FPGAs is flexibility, dynamic hardware reprogrammability, and that's really well suited to this type of environment. That's why you saw so many, and still see so many, SmartNIC and DPU deployments that were built on FPGA technology, not just to prototype and drive early designs, but actually for production deployments, because those requirements were changing faster than ASIC life cycles could keep pace. And so as these overall system topologies continue to shift at this pace, I think we're going to see significant prevalence of FPGAs, in addition to obviously increased use of ASICs for the places where you have a level of scale where the economics of that is justified, that adapts where fixed silicon can't. But you also, Allyson, asked about where the industry isn't paying enough attention. And this is something I've been thinking about a bit differently than the time that I, had spent at my prior companies. I think a lot about AI infrastructure at a facilities level more than I ever have before. Part of that's, work that I'm doing, but part of it's simply living where I live. I live in Phoenix, Arizona, and I drive around town and I see data centers going up everywhere. And the reason for that is Phoenix is a fast growing market. In fact, it's the second fastest growing market for data center build out. in the US, behind Dallas and the rest of the Texas ecosystem. And what is something that Phoenix and Dallas also have in common? They're really hot environments. They're really hot climates. And so when you think about, okay, data center infrastructure, you think about a few key things like power and water are always making the headlines. And I really think the industry is doing a tremendous amount of work in those areas. But one problem that I think is not getting enough attention is heat and the amount of heat generation and heat pollution that the data centers are creating. And so, but there's a lot of really good research going on. And in fact, there's some research that has come out of Arizona State University recently that I think needs to be getting a lot more attention and needs to be funneled into work in industry and really accelerating solution development. The School of Urban Planning and Engineering, under a research team led by Dr. David Saylor, has been looking at this problem and actually collecting bottoms-up data by mounting sensors to measure temperature and wind speed and wind direction on vehicles. So driving in the vicinity around data centers, and then mapping that, of course, to the locations, relative to where the data centers exist. And what he has found is that the cooling systems that are on the roofs of these facilities are ejecting heat, but also that the wind is carrying that heat into the surrounding areas and more specifically into surrounding residential neighborhoods. And what he is actually finding, he and his team are finding, is that neighboring communities are experiencing temperature increases of 2 degrees Celsius or more, not Fahrenheit, but Celsius or more. And these are in environments that already have a tremendously high ambient temperature just due to the climate. And again, of course, data centers aren't being all built in remote areas. They are going up in very large metro areas like Phoenix, around commercial and residential neighborhoods. And so the people living near them are feeling it, like physically feeling it. And, I look at this and I'm, absolutely not someone who is against infrastructure build out, against technology build out. I absolutely believe in and know that the demand exists for this level of compute. But I also am a firm believer in the priority of sustainability. And I do firmly believe that we have a tremendous amount of innovation capability in the industry, and we can build these data centers out in a more sustainable way. And so I think that when you look at power and you look at water, heat really needs to get more attention, kind of in this 3-legged stool. It's sort of this underappreciated third leg of the stool that I really would like to see the industry focus a lot more on addressing this very real challenge to ensure that we can build out this data center infrastructure more sustainably moving forward.
That's awesome. Now, Laura, I want to go back to you for a second. I think that one of the things that I think about is financial pressures that a lot of companies along the value chain are facing. And, where generating near-term revenue runs headlong into an engineering timeline that might be compressed, something has to give. You've been in that tension before. How do leaders make honest assessments about what is financially viable versus what is technically realistic?
I mean, I think that's kind of a classic question, right? I mean, I used to joke like 9 women can't have a baby in a month, right? So like, how do you really kind of address that? Like, yes, absolutely. We want to push, we want to squeeze, we want to get, as clever and creative as possible, right? But I think, great leaders pull in their entire teams as you're setting your roadmap, right? And really assess every lever that's available to them, right? There's not one answer, right? That it's going to be an assessment of like, what are the risks? What are the opportunities? Where's the business? And I think a rolling 3 to 5 year planning horizon is essential for any team, right? So your development cycle should not be a surprise to you, right? You should be already kind of, that far out. So, I mean, if you are kind of running into that crunch, right? What went wrong in your original assessment, right? Kind of where are you, super clear on what matters most right now? And then, do you have some ideas of kind of what could give here, right? Are you going to maybe underinvest in something to put a little bit more money towards the thing that's really important? Is there some, maybe underappreciated asset in your portfolio that maybe could drive some revenue and into a gap, right? If you're going to have a delay, are there kind of creative pricing things you could be doing, right? So I think, there's many ways you can kind of look at what you're going to do, right? But I think, it's really getting super clear on what you need and kind of what are those levers, and then what's the leadership decision on the decision that you're going to make, right?
Now, Lakecia, one of the things that I love that you talk about is this concept of an 80/20 portfolio discipline where you guide your teams to focus on resources, on what matters most, and have the courage to actually deprioritize the rest. And
Yeah.
that sounds really clean in concept, but how do you actually implement it in the real world?
No, I love that question. And, Jeni, plus 1,000 to what you just said. I mean, it's really about the people. And that even for 80/20 to work, you've got to bring the people along. And so, I think the hardest part of 80/20, the discipline of it, is really not figuring out, it is not just figuring out the 20% that matters. I think we all have had to look at our organizations and the projects that we've worked on and figure out what's going to give the biggest ROI and maybe some things that we've had to ZBB. I think most leaders can get there. But I think the hardest part is really courage. And even the work that you all were doing, Jeni, with Altera and standing the organization up and getting it ready for sale through private equity, it just requires courage, right? We have to figure out as leaders, what is the right thing to fund? What are the things that we have to stop funding? What is the right staffing model? We've got to figure out what work is essential, what work is interesting. What work is interesting but may not be essential, right? And so that's the hard part, because and I know you guys would agree with me, is when you're leading an organization and you have people who are very invested in their projects and they want to hold on to them. They're emotionally tied to them, and so they're advocating for something that they want to keep. But you really have to look at, what is your strategy? What is the strategy for the organization? And we know that strategy is not just what you choose to do. That's the easy part. Strategy is also what we're willing to stop doing, and that's the hard part. And as Jeni talked about as well, when you're inside a large enterprise, you can't just announce, hey, here's my strategy, here's what we're doing, and expect people to follow. This is about change management as well. So you've got to create clarity. You've got to bring them along. And part of it as leaders is we've got to get clear on what that strategy is. We've got to articulate it. We're all leaders. We've been in the industry for a long time, and we love to win, right? We really do. And we love to create organizations that are focused on products and services that are going to win in the market. So I think the first thing leaders have to do when you're looking at 80/20 is just to create that clarity, but also define, what does it mean to win? And I think if people know what winning looks like for the organization, where we're optimizing for growth, they get that every project can't fit into that scenario long term. And so then they get clarity on the things that are going to help us be successful. And I think having them buy into or be a part of the process, Jeni, I'm sure this was the case with you guys, and making trade-offs visible. What is it that we're negotiating here? We all know that people may not always, I say, like the decision. I've been in organizations where I'm like, well, I don't necessarily agree with that. But I respect the decision when I have the ability to understand it and understand the why. And so this is a case of slowing down the speed up. A lot of times leaders, because we get it, we expect the organization to get it right away. Well, that's not the case. You have to bring people along. And then I think the other piece, as you're making those trade-offs and things are falling below the line, and in some cases you might have to deploy or redeploy talent, you have to do it with grace and dignity. And Jeni, I think you hit on that. It really is important to understand that you have to bring the humanity in that process. And so when you deprioritize things, or things fall below the line, or you're ZBBing them, sometimes the projects go away and people feel like, well, am I still important to this organization? Do I still have a role to play? And so I think it's important to make sure that we're taking that talent and we're put it in spots where they're going to be working on things that are high value, if that makes sense. And I think that's how you keep the momentum. Thank you for the question.
Thanks, Lakecia. Laura, I wanted to get into something else. You mentioned that you're a co-founder of a startup, and you didn't really say enough, so I'm going to help. You co-founded Misa Labs AI, which means that you're sitting in the early stage of some of the very same pressures that we're talking about in real time. Mm-hmm. And one of the questions that I had for you is, how has your thinking been reshaped through this experience when you look at the types of trade-offs that you need to be managing through in a very small company versus what you've experienced historically and working with some of the industry's behemoths?
Well, I mean, I think, it's really all the exact same things, right? The core financial fundamentals, right? It's identical. It's just like, right, the scale has been way reduced, right? So it's given me a much greater appreciation for the things that I thought I had in sharp focus, right? I was nodding along with Lakecia around clarity and what are you doing? What are your success metrics, whatever. But I mean, I think this is kind of given that to me on steroids, right? I mean, I look at literally our cash balance on a pretty regular basis, right? So how are we way more focused, laser focused on what are we doing, right? How are we experimenting? Are we doing A/B testing? Are we crystal clear on what a success metric needs to look like to be able to continue to keep funding something? You know, I thought I was good at it before. I think it's really got to force me into it. And I'd say we have less time for imbos, but like every dollar that we're spending, we're going to run a marketing test. We're going to run how many, LinkedIn messages are we going to run with this message or that message, right? How many things are we going to try? What does the success rate need to come back with, right? That didn't work. How do we literally cut the bill of the software thing that we just, bought to kind of run this one? So I would say those are some of my kind of key lessons. And I think the other piece around hiring, right? It's I don't want to lay anybody off at a startup. So my philosophy has 100% changed. Like we are now only hiring if we get a customer win, not we're going to hire and then hope that we get a customer win, right? So, because it's one of the biggest expenses on the P&L. I remember I interviewed somewhere once, and they had 1,000 engineers, and I kind of guessed what their run rate was. How do you know that? And I was like, oh, I did learn a thing or two at Intel, right? But I mean, people you're absolutely your biggest expense, right? So how are you making sure that you get the right hire at the right time, and you can kind of, and that person that's not just a number on a piece of paper. That person is kind of sustained through your business plan. I think the other big thing is that, people are very excited about big companies and big logos, right? But those partnerships or those engagements need to have immediate value for me at a startup, right? I can't kind of get in with the dance and like, how long is it going to take? And did your attorney review our thing and whatever? Like, I need to be able to get in and get out. So how are we slowing down some of those really great sounding engagements, really moving our business forward? And then we can re-engage when we're ready and they're ready. And hopefully we can go faster, or I have a little bit more bandwidth to kind of deal with some of those slow timelines. So, I mean, it really has been a forcing function around clarity of focus, speed, and sequencing. And cash.
Cash is king, right?
Cash is king.
I love that. And some of the things that you said just resonated with me on how we run TechArena itself. So yes. I want to talk about one topic with all of you, and it's something that I hear from clients a lot, which is I need to operate with incomplete information. I mean, many business leaders right now in our sector are being asked to project enterprise adoption of agentic AI over the next few years, and good luck with that. That's real-time pressure. Without naming companies, if you prefer not to, can you walk us through a moment when you had to make a decision with incomplete information? How did that decision flow? What did you know and what did you not know? And how did you get comfortable enough to move?
Yeah, I can go. As I mentioned before, I led a number of different product portfolios at Intel, and one particular example comes to mind where we had to make a really tough decision, end of life, multiple different product lines that had been in the market for multiple years, and it was a really tough call. Not because the strategic rationale wasn't clear; it actually was fairly clear in terms of alignment of these particular products with the market and our need to free up the R&D investment. Back to Laura's discussion of needing to make sure you understand where every single dollar is going. It was pretty clear we had to save this money, and it was clear that these were the products we had to choose. They just weren't the right architecture for maybe not for where the market had come from or where it was today, but where the market was going. They weren't going to be competitive enough for the future that we were building towards. And so all of those things we had conviction on. But what we didn't know was that our new plan, right, what we were replacing it with, the alignment of the new product investments with the customer needs for the future when those products would hit the market, whether that was going to work. And so, we had conviction in certain areas, but we had uncertainty in others. And we had to be able to make that commitment moving forward to bring our customers along. So, it was pretty clear, though, that we still had to move. We didn't have time to wait for certainty. It would have actually induced more risk to wait for a greater level of certainty. And it also would have meant continuing to invest in products that we already knew weren't right in our heart of hearts. And so, so that was all very clear. But the biggest thing is you got to think through, okay, what's the impact on your constituencies, both internally and externally? And one of the hardest parts was the customer conversations, right? You're going to people, customers and partners who had built plans around your product, made investments in your product, and you're now telling them, okay, that timeline has changed. We're moving on from these products sooner than we had planned. And that's never easy when you're talking about external customers and partners, when you're talking about internal teams who are very invested in the success of these product lines. So, it's never easy, but what you can control is how you show up with those, for those conversations. You need to show up with honesty, with clarity and transparency, and more than ever, you need to show up with a real plan, a real transition plan, and a commitment to minimize the pain, because there's going to be pain and there's going to be disruption, but you really want to minimize it, and you want to ultimately be their partner for the long haul. That call, that discussion isn't going to be painless, but you need to just have that discussion and manage that relationship as responsibly as possible.
Yeah, I'll jump in because I'll build on top of exactly what Jeni just talked about, but I'm going to approach it from the people perspective too, just double clicking on the last few things that we've talked about, right? I think some of the hardest calls that I've had to make are partner with leaders who are in very senior roles that we've had to make were major reductions in force or major resource shifts. And so, again, as we talked about earlier, those decisions are never really about numbers. We know that there are business decisions that have to be made, but it goes back to the deeply human impact that it has. And we all have weathered a number of those storms in our careers together and in other places that we've worked. Now, clearly, that there's a impetus for the change in business. Maybe the market is shifting, so the strategy has to shift. We've got to create capacity for new work going forward. But what doesn't change is you have the people on the other side of that. And so the concerns that you grapple with is I'm making these pivots, I'm making these adjustments, I'm moving people around, I'm having to reduce the number of heads, and you don't know if the strategy is going to work just yet. But you do know that there's going to be impact to the morale and the execution. And then going back to something you said, Jeni, is that you might be removing resources, but customers still have needs. And if people are tied to supporting those customers, you can't just go and say, well, we've had a resource decision and it's probably going to impact your business. No, you've got to pivot resources to still give the same service level to those customers while you're making those changes. And so I think it's not just the internal impacts, but it's the external impacts to your business and having to find ways to continue to support your partners and customers seamlessly when you've actually probably removed a dedicated resource. And so in both cases, I think it's important to be clear on the business reason. So I would come back and remind myself, here's why we're doing this, and look at long term of, we're having to, for lack of a better term, protect the quarter or make sure we can, remove the head count. But you've got to also be looking at the future. So it's not just one side, it's both sides of those coins. And then helping people move through the change. I will never forget a situation where I had an organization, I built the team, and within a year, I had dismantled that team, and people left their organizations, their teams to come work with me. And now I'm having to, we're disbanding this organization. But for me, it was very personal, and it was sitting down with each individual and saying, we're going to partner together. I'm going to make sure I help you land a role. And then having leadership, support my decision. And I will never forget during that time, my leader said to me, well, Lakecia, what about you? And I said, it's not about me. I said, I will sweep the floors. But the most important thing is this team, we want to get them understanding the change while we're changing, how to navigate it, and more importantly, land them. And so, I know we would agree that you can never really get fully comfortable with decisions like this. You should never, in any case. But it's just being grounded on what we're doing, while we're doing it, and making sure that humanity is not lost, and bringing the people through the process and doing everything you can to land them somewhere else. And also at the same time, taking care of your customers and partners through the change. So those are some of the most critical challenges I've had to make, with, in a lot of ways, with incomplete information. But you're given a certain set of data and you've got to go execute.
I think going back to your kind of your question around like perfect data, I mean, I don't think I've ever had perfect data for any decision, right? I mean, I think that's a fallacy, and I think people fall into the, well, just bring me more, bring me more, bring me more, and it delays your decision versus actually making it clearer. So I do think you kind of have to, move, and maybe you have kind of a partner organization that can kind of help provoke some of those, conversations early on, right? Because I think as a leader, it is, hey, if things are running, if everything looks calm, right? Like, where's the duck going down, like, like this. But in our Wi-Fi group back at Intel, right, we'd actually set the standard, right? Like, we created Centrino and like putting Wi-Fi in laptops. We're all in it right now, right? But when you're at the top, right, when you have all the share, you probably have the most to lose, and you're kind of maybe a little blind to it, right? And I think especially in a tech-led or an engineering-led company, right, the best technology has to be the one that wins. And really what you see is a lot of things get disrupted from the bottom, right? And so we started to hear from our sales team that we had the high end of the products, the 2x2s and the 4x4s, more antennas, more receivers, better Wi-Fi signaling, right, from anywhere, right? But we started to hear from sales that we were getting, we were starting to see that we were going to lose some share to kind of these 1x1s, like much, much, much cheaper, like less than half of what we were charging for ours. And our team kind of just dismissed it. They're like, that's not good technology. Who would buy that? And I'm like, lots of people, right? So I kept trying to kind of go in, and we just didn't have the right information. I kept getting kind of pushed back from the GM. I'm like, well, show me the deals we've lost, and bring me the rock, and whatever. So I started to kind of try to address it in a different way, because it was my job to try to kind of provoke some of these conversations. And so I worked with the team to like, hey, our business unit maybe doesn't make the most money. So how could we save more money kind of in what we're doing? And could we apply some of that savings into kind of this lower end line, right? So, and I got pushed back from the GM on that one too. He was like, well, no one's telling us we have to cut spending. I'm like, well, wouldn't you rather set your own target to reduce your own spending versus when you come under the gaze of someone who then gives you a target that's much harder for you to hit? So we kind of got there, we kind of worked on it. And we did start working on some low end products, and lo and behold, things that are most of our laptops now are these, sub $5 Wi-Fi cards. And the data eventually got there, but that I think that disrupting yourself, or kind of, that what's that scan that you're doing around your environment of where are you vulnerable? And especially in a tech-led company where you can kind of worry about that, like, oh, it's perfect. This is the better tech. This is the better this. Better doesn't always win, right? So how do you have kind of that contingency plan? Yeah.
Love that story. We are out of time, so I'm going to go for one lightning round question. You guys are all launching advisory practices, which means you're on the other end of the table, providing advice to leaders as they navigate these challenges themselves. The lightning round question is, what one thing would you suggest that leaders think about today as they're navigating this complex and fast-paced landscape? Jeni, you want to go first?
Yeah. The question that I would ask is, do you have clarity on how AI is changing the way that your organization is making decisions? Leadership is about the pace and the quality of your decisions and how they get executed. So you need to know how you are using AI to transform the decision process before it transforms you outside of your control.
I would add to that, what decision are you about to scale that you don't fully trust? I have seen leaders with incredible instinct. Like, they don't know, but they're like, that looks wrong. So if you're not 100% bought in on something you're about to scale, there's something's not quite right. So take another look.
Yeah, I think we're all in the AI vein. I mean, I think for me, and the question is really around, are we measuring AI progress, or are we measuring AI activity? There's a lot of activity, but we really want to focus on the progress, not just pilots and licenses and use cases. But going back to what you ladies said, is AI really helping us make better decisions? Is it improving customer outcomes? Is it improving margins, creating revenue? At the end of the day, we want to execute faster and want to make more money. So I would just say AI activity is not the same as AI progress. So don't get into that.
I love that you said that, Lakecia. I've watched things on the news of like, we're token maxing. I'm like, are you nuts? Like, tokens aren't free.
Right. That's
I think
activity.
I'm going to add one final one before we sign off. I think that the thing that I would ask everybody to do is not forget that humans run businesses. While we are over pivoting into AI, it's going to be your human talent that is going to shape the future of your business. And they're also going to shape how you adopt AI to drive to this moment. So with that, I want to close the first great debate of our TechArena advisory team. Lakecia, Jeni, and Laura, thank you so much for joining me in this discussion. It was a fabulous one. Thank you.
Yeah, thank
Awesome.
you.
Thank you, ladies.
So interesting.
Thanks so much, Allyson.
Glad to be here.
Yeah, thanks, Allyson.